The class of 2021 Bitcoin investors face a stark reality. 3 years later, their investment seems to be at a standstill. But beneath this apparent failure lies an extraordinary tale of opportunity and recovery. Discover how these investors turned the despair of the 2022 crypto winter into a 300% gain, and learn the crucial strategy that made it all possible. Picture the disappointment of the class of 2021 Bitcoin investors as they watch their portfolios drop underwater during the early months of 2022. The price of Bitcoin, once a symbol of their financial aspirations, now fell through the same levels they had bought in at only 1 year prior. For many, the dream of quick riches had faded into a harsh lesson in market volatility. Today, in 2024, the Bitcoin price has since recovered and is now holding steady around $60,000, the same price that the class of 2021 had bought into the market at over 3 years ago. Yet, hidden within this apparent stagnation was an overlooked opportunity. While some investors may have felt defeated, a select few recognized a golden chance to transform their initial setback into a remarkable victory. As we unravel this story, you'll see how a period of despair became the foundation for an incredible financial turnaround, and why the true potential of Bitcoin investing lies not in quick gains, but in strategic thinking and patient execution. This video is brought to you by the world-class Bitcoin brokerage Caleb & Brown. Discover the ease of buying, selling, and safely storing Bitcoin with Caleb & Brown. Our new partnership brings you personalized 24/7 brokerage services, guiding you through every step of your Bitcoin journey. Whether you're buying for the first time or expanding your portfolio, Caleb & Brown's dedicated brokers offer you unparalleled support and expertise. Enjoy peace of mind with their secure cold storage and unlimited access to your personalized broker. Find the link in the description of this video to start investing in Bitcoin with confidence today. And as always, I am not a financial advisor, investment advisor, or tax advisor, and this video is for educational purposes only. Viewers should do their own research or seek a professional advisor before acting on anything stated in this video. While many saw only despair in 2022's plummeting Bitcoin prices, a select few recognized an extraordinary opportunity. What if the secret to turning a stagnant investment into a 300% gain was hiding in plain sight, waiting for those with the foresight to seize it? The year 2022 brought a severe market downturn that saw Bitcoin prices plummet below $20,000. For many investors, especially those who had entered the market during the bullish run of 2021, this crash appeared to be a financial disaster. However, this dramatic price decline actually presented a golden opportunity for those who understood the concept of buying the dip. Buying the dip is a strategy that involves purchasing assets during periods of price decline. The rationale behind this approach is simple yet powerful. By acquiring assets at lower prices, investors can potentially benefit from future price recoveries. In the context of Bitcoin, this strategy can be particularly effective due to the cryptocurrency's historical tendency to experience significant price volatility followed by strong recoveries. Imagine a class of 2021 investor who initially bought Bitcoin at $60,000. As the market declined in 2022, they had two choices: hold their position and hope for recovery, or seize the opportunity to lower their average cost basis by purchasing additional Bitcoin at the reduced price of $20,000. By choosing the latter option, this investor could have significantly enhanced their potential returns when prices rebounded. Let's break down the numbers to illustrate the point. If our hypothetical investor had initially invested $10,000 at $60,000 per Bitcoin, they would have acquired approximately 0.167 Bitcoin. Now, if they had the foresight and the means to invest an additional $10,000 when Bitcoin dropped to $20,000, they would have acquired an additional 0.5 Bitcoin. This would bring their total holdings to 0.667 Bitcoin with an average cost basis of $40,000 per Bitcoin. The implications of this strategy become clear when we consider Bitcoin's subsequent recovery. As the market rebounded, reaching levels around $60,000 again, our savvy investor would now be sitting on a significant profit. Their initial investment, which appeared stagnant or even at a loss, has now transformed into a substantial gain. Implementing this strategy requires discipline, research, and a strong understanding of market dynamics. Not every price dip represents a buying opportunity, and investors must be cautious of falling knives, situations where prices continue to decline sharply. The 2022 market conditions reflected a broader crypto winter influenced by external economic factors such as rising internet rates and inflation, as well as the catastrophic failure of the exchange FTX. These elements created a challenging environment that required careful analysis to navigate successfully. The lesson here extends beyond just Bitcoin. The principle of buying the dip can be applied to various investment vehicles, emphasizing the importance of maintaining a long-term perspective and the ability to act decisively when opportunities arise. It's a strategy that transforms market volatility from a threat into a potential advantage. As we've seen, market volatility can be an advantage for the prepared investor. But the true test of any strategy lies in its real-world results. Enter Bitcoin's journey from 2022 to 2024, a period that would separate the wheat from the chaff in the Bitcoin investing world. The Bitcoin price chart from 2022 to 24 tells a compelling story of recovery and resilience. In January 2023, Bitcoin hit a low of around $16,000, a stark contrast to its previous highs. This was a moment of truth for investors. Those who saw only despair missed out on an incredible opportunity, while those who recognized the potential were poised for significant gains. By March 2024, Bitcoin had staged a remarkable comeback, reaching approximately $68,500. This represents a staggering 300% increase from the lows of 2022. For investors who had the foresight to buy during the dip, this recovery translated into substantial profits. Several factors contributed to this impressive turnaround. Increased institutional adoption played a crucial role, with major companies and financial institutions showing growing interest in Bitcoin. The approval of Bitcoin ETFs also marked a significant milestone, providing easier access for traditional investors and lending legitimacy to the asset class. These developments, combined with a general return of bullish sentiment to the cryptocurrency market, created the perfect conditions for Bitcoin's resurgence. The contrast between investors who merely held through the downturn and those who strategically bought is more stark. Consider two hypothetical investors who could both be considered a part of the Bitcoin class of 2021. Investor A, who bought one Bitcoin at $60,000 in 2021 and held through the crash, and Investor B, who also bought one Bitcoin at $60,000 but then purchased an additional 2 Bitcoin when the price dipped to $20,000. As Bitcoin recovered to $60,000 by early 2024, Investor A would be looking at their Bitcoin holdings exactly at the break-even point with a gain of 0% after holding for 3 years. In contrast, Investor B would be sitting on a profit of approximately $80,000, or an 80% return on their total investment. This simple example illustrates the power of the buy-the-dip strategy when executed with patience and conviction. Real-world success stories further underscore the effectiveness of this approach. While specific individuals may prefer to remain anonymous, Bitcoin communities are filled with accounts of investors who significantly lowered their average cost basis during the 2022 downturn and reaped the rewards in 2023 and 2024. One such investor shared on a popular forum, quote, "I was initially devastated when Bitcoin crashed in 2022, but instead of panic selling, I saw it as a chance to accumulate more at a discount. I doubled my holdings when Bitcoin hit $20,000. Now, with the price back above $50,000, I've not only recovered my initial investment, but I'm also sitting on a substantial profit." This recovery also highlights the cyclical nature of the market. Bitcoin has historically gone through boom and bust cycles, each time reaching new heights after periods of correction. Understanding these cycles is crucial for long-term success in Bitcoin investing. However, it's important to note that implementing a buy-the-dip strategy requires more than just blind faith. It demands a deep understanding of market dynamics, careful risk management, and the emotional fortitude to act when others are fearful. Not every dip represents a buying opportunity, and investors must be cautious of catching a falling knife, a situation where prices continue to decline sharply after an initial drop. The 2022 to 24 period in Bitcoin's history serves as a powerful reminder of the potential rewards awaiting those who can maintain a long-term perspective in the face of short-term volatility. It demonstrates that market downturns, while challenging, can present unique opportunities for strategic investors. The art of buying Bitcoin dips is akin to navigating treacherous waters. Just as skilled sailors read the winds and currents, successful investors must interpret complex market signals to spot genuine opportunities. Mastering this skill can mean the difference between capitalizing on temporary price drops and falling victim to prolonged market declines. So, what separates the Bitcoin investors who thrive during market downturns from those who falter? The answer lies in a combination of key indicators, fundamental analysis, and disciplined risk management. If you are a new Bitcoin investor looking for guidance before making your first investment, consider the advantages of having your own dedicated broker at your service to provide market insight and support to help you invest and safely store your Bitcoin. Hit the link in the description of this video to be directed to Caleb and Brown today. Successful dip buyers rely on a set of indicators to identify potential buying opportunities. Support levels, for instance, are price points where Bitcoin has historically bounced back. These levels can provide a strong foundation for making informed buying decisions. It's crucial to acknowledge that buying the dip is not without risks. The most significant danger is the possibility of further price declines after making a purchase. This scenario, often referred to as catching a falling knife, can result in substantial losses if not managed properly. To mitigate this risk, experienced investors employ strategies such as setting stop-loss orders. These automated sell triggers can limit potential losses if the price continues to drop beyond a predetermined threshold. Implementing a successful dip buying strategy requires more than just identifying opportunities and managing risks. It demands discipline, patience, and thorough research. Investors must resist the urge to buy impulsively during market panics and instead adhere to a structured approach with predefined purchase prices and holding strategies. Market timing and emotional control play pivotal roles in this process. While it's essential to act decisively when genuine opportunities arise, it's equally important to avoid over-trading. Excessive buying and selling can lead to increased transaction costs and diminished returns, undermining the potential benefits of this strategy. A well-researched approach to buying Bitcoin dips can significantly enhance an investor's portfolio value. By purchasing assets at lower prices during market downturns, investors position themselves for potentially higher returns when the market recovers. The class of 2021 Bitcoin investors who successfully navigated the 2022 downturn exemplify the power of this approach. By recognizing the opportunity presented by lower prices and acting strategically, they transformed what appeared to be a stagnant investment into substantial gains. Their experience serves as a testament to the potential of turning market volatility into opportunity. Please like this video if you enjoyed it and click the link on the screen now to watch the next video from Bitcoin Basics.